Unfortunately, everybody has become a trader these days because they are finding that the value of money is falling so dramatically. They are not able to make their ends meet. They see other people making money, so they want to emulate them by trading that. You can buy short-term bonds or you can buy triple rated bonds, but you cannot buy the government bonds in this brave new world at this point of time. I was naive enough to think that India can have its own foreign policy. And I wrote about that there are only 4 countries in the world which can run independent policies: US, Russia, China, and India. So US has energy, it is rebuilding AI. Russia has energy, it is rebuilding AI. China is having a lot of things. India, unfortunately, neither has AI nor energy security.
Ritesh, hi, thanks for joining us on Thrive by Grow. It's lovely to see you.
Thanks, Radhika.
So, Ritesh, there's so many things that you called out when everybody else was not thinking about them, whether it was de-dollarization or an emphasis on gold. So, what is it that you were seeing and the rest of the world was not seeing it?
So, actually, the world changed after 2020. 2010 to 2020 was the best period for investors. So we'll have to just go a little bit behind to just understand why we took that call. 2010 to 2020, US oil production went from 6 million barrels to 13 million barrels. It's like creating a new Saudi Arabia out of nothing. Uh, there was no need for macro guys because everything was stable in the world. It was the most beautiful world. US dollar was stable, interest rates were coming down, money was going into US. So nothing needs to be thought about. Then came COVID. And after COVID, two things happened. Within 12 months, US added 40% of new money supply in a matter of 12 months between 2000 and 2021. So it is the 250th anniversary of United States. So think about 40% of new money was created in a matter of 10 months between 2020 and 2021. Effectively, I could say that the value of your salary, actually, the value of your salary went down by 40% because the currency, 40% more currency was printed. So that happened in 2021. 2022, everybody remember that Ukraine-Russia war. At that point of time, something very interesting happened. They just sanctioned and seized Russia's FX reserves. So when I looked at both the things put together, when adding new money supply in United States, and secondly, seizing of Russia's FX reserves, that is what the brave new world. It was very apparent to anybody that that is the time that something had changed, and that was the time that where we took the call that this is where some which has worked for last 10-15 years from 2010 to 2020 will not work for 2020 to 2030. Then came de-dollarization, then came reindustrialization. US wanted to get back its job, US wanted to industrialize. All these things are actually continuing from that day onwards. But the starting point was 2020 to 2022 when everything changed actually.
And of course, we have to talk about COVID. You mentioned that too. Now, your CFA society presentations, I think one of them you have termed Brave New World After COVID. So, if we talk about an Indian investor who's not following perhaps global macros on a daily basis, is there something, a structural break that has taken place that they're underestimating or not paying attention to?
Yeah, actually, Indian benchmarks are made up of consumption only. We, India and US, both are consumption-oriented countries. In US, 70% of their GDP comes from consumption till last year. For the first time, it is coming from AI. In India, I would add IT plus banks, all these things put together 50-60% of the benchmarks. But in the brave new world, money will be made outside the benchmarks simply because the government is saying, I want to divert the resources away from consumption into production. I want my supply chains back. And this started happening even before the Iran war. After Iran war, I'm sure every country, including India, will double down on energy security, critical material security. When did you last think about that India is talking about, coal to gasification? They're talking about Andaman Nicobar, thinking of deep sea drilling. All these things are happening now. Even in US, rare earth metals. When did so think about it? It was Chinese companies, Chinese government which used to buy stakes in Chinese companies. Here, US government is buying stakes in US companies. When in a capitalistic society, how can a government buy stake in the listed companies? It has never happened before. So actually, this is what the brave new world is. The brave new world is completely different than the old world which existed between 2010 to 2021, 22, you can say. This world is more
Right.
about, reindustrialization, de-dollarization, supply chains, just in case, changing from just in time. So all these things, and I had created a slide where I had listed out 15 things which existed before to 2020, and now the 15 things what have changed after 2020.
So, it's interesting you're talking about countries trying to be more self-reliant now,
Hmm,
right?
hmm.
A shift towards manufacturing as well. Reindustrialization is something you just spoke about. Where does India stand today? Because one gaping hole that everyone is talking about is that R&D we have not focused on. AI we have missed the bus. Manufacturing, the whole China plus one concept, India has not been able to optimize that opportunity as much. So where does India stand, as it were, in the new re-emerging global monetary order as well?
I was naive enough to think that India can have its own, foreign policy. I was naive enough to think, and I wrote about that there are only four countries in the world which can run independent policies. One is US. US, everybody knows, US, Russia, China, and India. But the thing is, US has energy. It is rebuilding AI. Russia has energy. It is rebuilding AI. China is having a lot of things. India, unfortunately, neither has AI nor energy security. So, over the next 5 years, I hope is still the right word, simply because over the last 2 years, manufacturing as a percentage of GDP in India has not risen above 14%, what it was 2 years back. I still believe that the kind of resources which the government is putting, the kind of resource allocation which the government is trying to do, will lead to India's manufacturing as a percentage of GDP will move from 14 to 15, 16, possibly 17% over the next 5, 6 years. And that is what I don't want. I'm not saying I want India to do that thing. It's now India has decided. It's that like the US has decided that we need to rebuild our own supply chains. US is very apparent. You can see that thing what they are trying to do. India is still not apparent.
So now, as we see this global monetary order of the past 30 years actually fracturing, changing, how does this translate into a typical portfolio of an HNI, right? Whether it's to do with US equities, dollar bonds. So what's your perspective on how these things should be changed or weighted should be, played around with? What's your take now on what that HNI portfolio looks like?
Okay, so in my view, so let's look at where we are today. US is 26-27% of global GDP, but 60% of global market cap. It was the lazy investing which started in 2013-14, which every fund managers continued to add US weight, and dollar was also stable. So they continued to add weightage on US assets. I think in the brave new world, what we will see is US share in global market cap actually topped out in 2024. It is already down 3% from the top. US share in global market cap will continue coming down over the next few years. Rest of the world shares in global market cap will continue moving up. Long-term bonds have no place in the brave new world simply because governments are indebted and they want to industrialize. That means they need to borrow more money from the future. So there will always create pressure on the bonds. You can buy short-term bonds or you can buy AAA rated bonds, but you cannot buy the government bonds in this brave new world at this point of time. And you need to reallocate or allocate your money to rest of the world. You need to allocate your money to supply chains rebuilding. So uh, I would say this is how Pinetree is invested. Up to 30% is US assets, 30-35% in commodities, and commodities or commodity equities put together, and 30 to 35% in rest of the world equities.
It's I think that's a very clear direction that you've given to our audience in terms of how Pinetree is thinking. But there is a contradiction that is confusing a lot of Indian retail investors right now. Because on the one hand, we keep hearing that money is leaking out of US mega tech
Hmm.
cap, and India is the destination for that money. But then on the other hand, we see that FIIs have been ruthlessly selling Indian equities for over a year now. So, can you clear this confusion
Yeah,
for us? What is happening? Yeah.
yeah. Okay. So when I said rest of the world, India has still not got its flow, and I'll tell you why it has not got it. Uh, Go back to 2013 to 2023, our nominal GDP was growing at 12% quarter on quarter. Analyze, it was 12%. Corporate profitability is a function of nominal GDP. So you had a very good corporate profitability. After Lok Sabha election is when our spending pattern also changed. We went from capex to opex, more subsidies, and we did not allow our currency to depreciate. The previous governor did not allow the currency to depreciate. Moreover, our nominal GDP has come down to 8-9%. In this brave new world where the nominal GDP is 8 to 9% in India, corporate profitability will be lower than what it used to be from 2013 to 2023. Plus, what do FIs own? FIs own only what is there in the benchmarks. Everybody's favorite is banks and IT. Look outside the benchmarks. There are massive winners getting created in the sectors where the government is saying, I'm serious. This is where we are looking at over the next 5-7 years. So why are you looking at your benchmarks? Your benchmarks don't represent tomorrow, India's tomorrow. So if you tell me, okay, so the people who are not looking at benchmarks, for them, there are enough opportunities. There are companies which are growing at more than double the nominal GDP quarter over quarter in India. Unfortunately, they are not in the benchmarks.
Yes, so I wanted to ask, what are the sectors, what are these companies where the opportunity exists?
So I had come to on your channel, I think a year or 2 year back, I talked about 4 sectors, and that is where it's been there. I've not changed anything. One is the electrification. I keep on writing about electrification. It is not about India, it's a global phenomena. Okay, electrification is a very simple. There is a very big ecosystem of electrification. Secondly, there is defense technology. You've seen what India has done over the last, we used to be 25% used to be indigenous for defense technologies. Now 60-65%. Your defense exports have gone to 50-60,000 crore, possibly 100,000, 1 lakh crore in the next 4 or 5 years. The third is engineering tech. There's a lot of engineering work from rest of the world which is coming to India. The only thing which did not work, and because of capacity constraint, was tourism in India. And yes, there was something on wealth management. Absolutely. So I've not looked at anything outside these sectors, because there's enough opportunities in these sectors. Why to look at anything outside this sector? Yes, tomorrow my government tells me, no, we want to do this also. What is that new thing? If they want to tell me something new, then I would want to look at there. I think the time is coming where government is actually be determining the credit cost for different sectors, depending upon they think is a priority for them. And it is not only India. Let's not single out India. It's happening worldwide. India is just adopting what is happening worldwide. So why think from your point of view, in this brave new world, where 60% of the GDP in France come from government, 45% of GDP in US comes from government, more than 30% of GDP in India comes from the government, why not think from the government point of view, what they want to do?
Hmm. Now,
Unfortunately, yeah.
go
Sorry.
ahead. Yeah.
Unfortunately, most of these companies are not in the benchmarks.
Hmm.
Your large
Okay,
cap
so we
benchmarks. Large cap benchmark, sorry.
Okay, understood. Now, you spoke about the signals that are coming in from the government. What did you make of, the advisory of sorts that came in from the Prime Minister about delaying gold purchases or delaying foreign travel? What did you make of it?
So the situation is actually bad on the fiscal front. Obviously, because of election, you had to delay the price increase. And even before that thing, whatever discount you got it from Russia was actually paid out in the form of subsidies. All those kind of yojanas which is there in India. So this fiscal situation is bad, only from oil front, but even from fertilizer front, situation is bad. And that is why what he's saying is, I need time to just rebalance my fiscal. Give me some time to rebalance my fiscal. So this is, I think, a temporary measure. Otherwise, I strongly believe that you should not be holding USD at this point of time. And Indians were doing smart thing. Actually, Indian housewives are the biggest winner. They've always been buying the same thing again and again, irrespective of whatever is told them. And now even in, what is going on in Western world, they've been proven right. So I think it's a temporary measures. We need to balance our fiscal. So that's the only reason in my view. And India is not the only one which is doing it. Every country is trying to do that thing.
Sure. So you spoke about, Indian women and Indian housewives who've been, buying gold year after year. Now, Indian HNIs are also asking this question, and the woman sitting on inherited jewelry, or the person who bought SGBs, the one in gold ETFs, are they accidentally really holding the right macro hedge according to you? And also, what should the actual allocation size really be given the current scenario?
Look, the first answer is very clear. Yes, they are sitting on the right macro hedge. For the simple reason, next few years, US wants lower US dollar. Look, if you want to manufacture in the country, you need to make it very attractive for foreigners to come and invest in your country. It cannot happen if your currency is costly. But if the currency is cheaper, you know how NRIs will flock to India if once dollar rupee goes to 100, right? As the currency becomes cheaper, they find it much more. That's the same way in USD. They are saying for the next few years, we want lower currency. And actually, see, for the first time in Iran war, the bond yields are higher and US dollar is not higher. Every previous war, every previous war, money has moved into US dollar and US treasuries, leading to higher US dollar and lower US treasuries. For the first time, it is leading to higher US bond yields, but not higher US dollar. Something is changing already. So for the next few years, US is saying, I want to rebalance my economy. For that, I need lower US dollar and possibly lower US bond yields. So something is coming over there. If that is a thing, some other currency should be willing to bridge that gap if US dollar is not the reserve currency or it's a diminished reserve currency. China is saying, I don't want to be the reserve currency because you have more, there are more liabilities associated with becoming a reserve currency. You need to run current account deficit. But China runs a very big current account surplus. So China says, I don't want to be. And I don't want to police the shipping line across the world. That is not my job. I don't care about that thing. So for the next few years, till the time US deficit continues to rise, you need to continue to own gold. A time will come, I do not know when you will have another reserve currency, or possibly US get reindustrialized again in the next 5, 6, 7 years and says, I'm getting ready for my back the responsibilities which comes with a reserve currency. And that is what gold is telling you. Gold is saying, okay, nobody is willing to take the reserve currency mantle. I'll be the reserve currency for the time being.
For the time being, gold, but what other option could be there if not the dollar?
Any hard asset.
Okay.
Any hard asset. You remember that, replacement theory, asset replacement theory, which 25, 30 years back, I think Arshad Mehta talked about. Somebody who's having higher fixed cost assets in the ground, in this coming rebalancing, coming reindustrialization, coming de-dollarization, the value of those assets will continue to rise.
Let's focus back on Indian equities, and we were talking about how, when it comes to emerging markets, Indian equities are still being considered, perhaps on the more expensive side. So you believe that we are more likely to see time corrections, sideways movement, than sharp crashes as earnings catch up to valuation. So if you rate it for us right now, plainly, India is buy, hold, or is the correction perhaps not completely done even now?
Give it 6 12 months, it will be done. Look, the
Hmm.
correction can come either through equity valuations coming down or currency falling. It's the same thing. In my view, it's the same thing. So let's say currency. So if Iran war would not have happened and oil was $80, I would have been very sure the correction is over. The time correction is over. Iran war has created one more, there is now one more thing to think about, simply because India is dependent upon oil prices. 85 90% of our imports is, we import all that oil. Once I know where the oil price stabilize, if you tell me in 6 9 months this war will be over and oil will stabilize around $80, I would say the time correction will be over. So it can, I happily, it is coming best through currency,
Hmm.
making things cheaper for
Hmm.
everybody to invest.
Hmm.
So it can happen either ways.
Yeah. So there's also a view that even if the war were to completely stop in the next week or so and oil prices stabilize, the recovery of the loss that we have seen will take much longer because we're going to see earnings getting impacted in the next few quarters. Um, what do you make of that? Because there and when we link it to valuations and market correction, how do you see it?
You're right. But let's say the war gets over tomorrow. We know there is a 2 quarters of disruption. But after 2 quarters of disruption, we know where we are headed for. Market always discounts the future, no? Always discounts the future. So what market needs is a clarity. And if somebody tells me the next 2 quarters will be bad of this company or this particular sector, but I have the clarity beyond 2 3 quarters, I'm not going to wait for that. I know that is going to come. Market always discount. Market is very efficient that way. But first, we need to see the disruptions. Where are the disruptions coming? We need to hear in the company's con call or the some sectoral thing, like those helium things, the fertilizer thing, the nitrogen related thing, the sulfur thing. It has still to come out. We need to see how much is the damage. Once we are aware about the damage, it is much easier to invest. You need to visualize what can happen in 5 years. As Stanley Druckenmiller says, today's stock prices have no meaning. You have to visualize what can happen in the next 2 years.
So it's interesting that you brought up where India's young population may be headed in the next 5 years. We may be given access to aging Asian economies. It's already happening to some extent.
Yeah.
I just want you to elaborate and expand on these themes a little bit because I know you've written very recently about this.
So, Western societies are aging, dramatically aging. Whether you go from South Korea to even China, we don't get the numbers of China. South Korea, China, Taiwan, the entire Europe, Canada, where I stay, Canada, US is actually still better. So, why did they start immigration? They started unrestricted immigration few years back. You know that thing, right? Now, there are some immigrants which do not assimilate in the culture. They want to change the culture. So the West love affair with unrestricted migration is over. But still, the societies are aging. I believe the Indian healthcare worker is an answer over here. So there was recently an ad. Israel had asked for 2,500 nurses from India. They were willing to pay 2.5 lakh rupees a month. Just a simple thing. Now, GCC countries will need to be rebuilt after this war. You know that thing, right? Ukraine, Russia needs to be rebuilt. Where do you find the cheapest workers in the world who are willing to work? The good work ethics, who assimilate in any society, keep their heads down, work. Western world has realized it is India. You will have Western world leaders coming to India to beg India for blue collar workers. You've already seen Russian Prime Minister there in India. Everybody's talking about, can you send us some workers? Then there is one recent theme about, we don't have people who are willing to fight for us in Canada. There's just no population. People don't want to fight. It's a matter of time you will have the Agniveers where there was a lot of controversies. They will be given, they'll be, uh, let's say a country like Canada or in European country, will actually be willing to, invite them with open arms and give them maybe citizenship to fight for, unfortunately, fortunately or unfortunately, for these countries. So if you are a blue collar worker in India, if you are an unskilled guy in India, get some skill, get some skill. And once you have that skill, you will
Huh.
have massive opportunities in rest of the world and rich countries. I'm not talking about poor countries.
Hmm. Mm. Very interesting. I think this is an interesting thought, something to ponder about. But you've also spoken about the AI race, and you've said it's ultimately constrained by power, not
Yes,
chips or talent, right? So
correct.
India has a massive data center build out underway, but there are some serious gaps, infrastructure gaps, energy infrastructure to in particular. Is India a credible AI investment destination for global capital, or even in this front, we are perhaps we missed the bus and we are a decade late?
No, I think there is something going on over there. Honestly, I've just seen only announcement, nothing more than that.
Hmm.
But two
Hmm.
interesting things happening in the Western world, which might not happen in India. One, GCC countries are no more, you know, after this Iran war, they are no more the easiest place to put data centers now, because there's a risk now associated with that. What is the war is going on? In US, lot of counties are voting against putting a data center. Water related problem, energy related problem, pollution problem. And I think that they are finding India to be much better. But the problem you will also face is, even India is there is a water scarcity in India. You have a lot of solar power, but you don't have the grid. Having said that thing, I think you will find huge amount of data centers being set up in India. Good for environment, bad for environment, I'm not going over there. But I'm
Hmm.
saying it will be easier to put it in India compared to any GCC countries. And think about it this way. What happened in India-Pakistan war, or that Operation Sindoor? India showed that we can defend our skies. If I'm a data center company, I will look to go into that country where a country can be secure. This is a new thinking process in my view. These mega cap tech companies will be thinking about it. So you will find that wherever there is a security premium, they will not go over there. And in all these things, I think India is actually very well positioned.
It's interesting you said that because earlier, as an investor, you didn't really have to think to a very great extent about geopolitics.
Hmm,
Yes, you
hmm.
did, you were
Yes.
monitoring prices, but as an investor, how aware do you need to be today of the geopolitical changes that seem to be happening at a much higher frequency now than we've seen in earlier decades?
So the empire has become weak. This is the same empire which should have kept a military umbrella on rest of the world. Correct. China able to get its copper from Chile. Why should India be able to get its own oil from anywhere in the world without any navy escort? Means, you know, that was because US was saying, I have that military umbrella. I'm policing the shipping lines. I'll take care of free trade and commerce. What you've seen now after Iran US war is that US is saying, or we know US cannot take care of that responsibility anymore. If US cannot take care of that responsibility anymore, you need to put geopolitical premium on each and everything across the world, especially anything which is through waterways, through sea. And most of the thing comes through sea only, right? So that is why you need to be aware about geopolitics in the changing world, where you know that the hegemon, the reserve currency, is not able, or it has become weak, that it is not able to keep the world safe.
Things are changing rapidly indeed. Let's focus on the Indian investor once again and, talk about real estate because that has been the sort of primary wealth building engine for most Indian
Yeah.
families in previous decades. And they've sort of prioritized real estate over equities, over gold as well. In a deglobalizing inflationary world, does it hold that position in a well constructed portfolio even today? Or you feel real estate is something that is now being displaced?
I will not hold real estate in tier 1 cities. Not at all. And I'm not talking about this thing today. I'm talking for the last 2, 3 years, I'm saying the same thing. Look, there's a lot of real estate gains had even come from ESOPs, plus the salary increase of these white collar workers, right? Now, those salary gains are not there. ESOPs are not making money in any white collar job. Plus, there is no incremental job requirement in white collar industry. Why would I hold any real estate in any of these 4 or 5 places except for a place where you have a GCC, global capacity centers are coming? I would hold real estate only in tier 2, tier 3 towns where the new manufacturing facilities are coming. And possibly now in Seven Sisters, including West Bengal, because I believe India will go for a massive infrastructure spend in around that Seven Sisters, West Bengal, you know, uh, obviously for other reason also, but there is a massive infrastructure spend coming. So if there is a, I would invest where either there is a manufacturing boom coming, there's a government infrastructure coming. I will not want to invest where the white collar workers stay.
But it should be part of the portfolio.
Look, it should be a part of the portfolio, but it should not be you. The way there was a real estate cycle, that cycle is over. That cycle is no more there. You want to have your first house, obviously you will buy first house irrespective of whatever is the price. But if somebody wants to be an investor, why don't go for InvITs and REITs? Why do you want to buy residential real estate in a top those 4 or 5 cities metros that we keep on talking about?
Okay, I think that's a fair point. So, today we see that HNIs are much better informed. They are more informed about new kinds of products as well, PMS, AIF, and all of that. But do you see what is the biggest gap that you see in their understanding, and what is also the most costly one?
So actually, family offices today are much more aware than the HNIs, because family offices are building the team within the family office. They're not depending upon outsiders, they're building the knowledge. HNIs are depending upon outsiders' knowledge. So that is the gap, because HNIs depend upon the wealth manager or somebody who tells them this is a new product, but they don't have any knowledge built up. So I would say that I would find family offices to be much better positioned in the changing world. And whatever new products can come in Western world, after 5 7 years, you find the same products coming in India.
No, but then that's a quandary, right? Because there is capital that they want to invest, but they may not want to wait till they understand a product. So, what's the best way to for them to really deploy this capital safely?
Look, why go to those kind of products which you don't understand? You can't just go just because something is working for the last 12 months, or India is not working for last 3 years. Let's go out and invest abroad without understanding what kind of products you are getting into that thing. So I think it is important for you to first build up knowledge. And that is, I put a lot out over there, but that is on global level. There are enough people in India, I'm pretty sure if you listen to them, they will tell you about different products. So you'll have to build up your own knowledge before putting any money into the products which you don't understand.
Okay, so we have a little bit of an example or perhaps advice to take from you. Now, if someone walks in with 10 crore rupees today, they want a globally aware, inflation resistant, inflation resilient, not resistant, India anchored portfolio built for the next decade. Could you walk us through how you would go about constructing that?
Look, India, I will not look at it. Honestly, I do not invest. There is no public money I invest in India.
Hmm.
It becomes much easier for me to do it globally. I'll tell you the reason.
Yeah.
India is just one country. You have 6 7 sectors, right? But when you are investing globally, there is always a bull market somewhere. There is always a particular asset which is 100% aligned to your thinking process. So I find that there are much more opportunities globally to invest. Just to give you an example, I did talk about oncology ETF because I see cancer cases going up big time. Is it a decadal theme for me? Yes, it's a decadal theme for me. Can I buy uranium? Because we know what is happening in nuclear energy, right? Across the world. Can I invest over there? Yes, there is a uranium ETF over there. For me to have a long-term call over there, that I know the supply demand scenario for the next 5 to 10 years. So there are a lot of examples like this thing, because there are hundreds of themes available globally. And India, you have same 5 6 themes within which you will have to allocate and reallocate your money. So how do I invest in those themes, you know, when I have much bigger, canvas of themes to invest with?
Okay. So,
Because you're asking me a lot of India things. I do not spend, I do not spend even 10% of my time on India, because that is
okay,
not
no
what I do.
problem. No
I do
problem. But
only
let's talk
global
about
investing.
something. Okay, so let's talk about something broader. And there are always these bubbles. Uh, that one. There's narrative building around certain
Yes.
industries, sectors, etc. Right? How do I, as a retail investor, separate the narrative from the fundamental or the core value of the thing?
So you will not be able to do it. We are in a democratization, the information is democratized. Retail investor unfortunately likes to buy the next shiny object, the one which has worked in the past. Then you do not look at, uh, you know, one, investing should be boring. The profitable investing should be boring. And what you buy today, you have to think from 24 months down the line. You are not thinking from tomorrow's point of view. So I found that in retail investors, and I think this is your data or Zerodha's data, 91% of retail investors don't make money. Unfortunately, everybody has become a trader these days because they are finding that the value of money is falling so dramatically, they are not able to make their ends meet. They see other people making money, so they want to emulate them by trading that thing. I would say that if you are, you know, uh, if you're investing in something, just think from 2 3 years down the line, what can happen, what can visualize from 2 3 years down the line, not today, what is going on today. Just don't chase something because it has worked in the last 3 months.
I think that's a very clear signal that we've got and an optimistic one to end this conversation on. Ritesh, thank you very much for joining us on Thrive by Groww.
Thank you, Radhika. Thank you to everybody.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.